Welcome back to another episode of With Sonar. I'm Luke Velasquez, and we've got a fantastic lineup for you today. Of course, I'm joined by my co-host, Kyle Taylor. But Kyle, we actually have a wonderful guest with us today, a treat, of course.
The hype is real. As if people weren't already hyped up for With Sonar, we are actually going to bring the ultimate showmaker, the showman, the really the guy behind all of this madness. And to really give him that level of hype, we'd like to intro our CEO, Craig Fuller.
Absolutely.
Craig, how are you?
Craig Fuller, thanks for joining us. How are you?
Hey guys, glad to be here. It is such an honor to be on With Sonar. It's my first time here, so I'm excited to be a part of it. It's a really great show.
Awesome, awesome. No, thanks for joining on. And it's definitely our first time as well. One of the best viewers that we've had, and so really we like to shake them up a little bit. What are you feeling out there? You talk to so many different people. What has been like the specific area that you like to hone in on as some of the changes? Everyone likes to talk about tenders or specific commodities, but where do you kind of lean in all this, and what do you like to focus on?
Yeah, so I think I have two go-to numbers that I look at typically every day. One is the OTVI index, the outbound tender volume index, which basically is a way to know what the tender volumes look like across the freight market. And it's important to know what a tender really is. It's an electronic transaction between shippers and carriers, and that OTVI index tells me relative to how the market's moving. So if I see OTVI increase in volume, then I know that there are more requests for trucks. If I see it decrease, then there's less requests for trucks. And it's not just the actual number that's important. It's the relative movement of that compared to either the past month, the past week, past year, past quarter, et cetera. So knowing what's happening around volume is really, really important.
Right, and it's almost the consistent volume as well. It's not necessarily the upwards and downwards movement all the time, but it's as this consists with volume, you just see more and more demand. And as we get into retail season and these peaks that are starting to happen, I don't know if you bought anything on Amazon Prime. Luke, are you buying anything on Prime 2 months that we're in right now?
So I'm not a good person to ask for that. I just jumped ship and went to Walmart Plus.
There we go.
Sorry.
You were like,
am I allowed to say that here?
you're no longer an Amazon Prime member?
No, I am still an Amazon Prime, but I've so the quick answer is no, I didn't buy anything on Amazon Prime, but pretty much the only reason why I went to Walmart Plus is for the free grocery delivery, which I've been using extensively, and it's quite nice, I must add. I know Amazon Prime does have grocery delivery in some areas, but it doesn't come to my house, so I had to go to Walmart Plus.
We have UPS and FedEx at our house almost daily, dropping off 4 or 5 boxes. But I think looking at that volume indicator tells us where things are relative to where they have been. And I think one of the things that people may not appreciate about the Sonar product compared to any freight market intelligence system that's out there is the value of that charting and being able to compare different indexes and being able to really get into what we call the technical analysis of the chart. Knowing where the charts have dipped, knowing where they've moved, the relative movement, the pace of movement, that's what makes that charting library so powerful to be able to see how things are trending and where they're likely to head.
Craig, I think that's actually spot on. So we've been talking with a lot of folks here. Kyle and I, as you know, we're on the sales side of Sonar, so we talk with a lot of folks, shippers, carriers, brokers, all around Sonar, and we look at OTVI extensively, right? I mean, it's a fantastic indicator, fantastic, not just leading indicator, but a great viewpoint for where the market is today. I mean, volume levels are up. Let's go ahead and flash the screen up real quick. I know folks here that watch the show, they've seen this before, but that blue line that we're looking at there, we'll keep it real simple. That blue line, that's the volume tenders, or that's the request from shippers on a daily basis. Again, don't worry about the number there. What's really important, if you see below that blue line, you'll see a purple and green line. That's where volume tenders were in 2018 and 2019. So you can see the massive gap. It's about a 50% increase in load request from shippers compared to this time last year. And while it's not pushing any higher since it looks like it stopped pushing higher about the end of about the end of August there, it's been maintaining that level. So we haven't seen it come down at all. Craig, any thoughts there?
Yeah, I actually I'm not surprised by that. And a couple of reasons I'm not surprised by that. When I talked to some CEOs of some large trucking companies, what they are telling me is that they don't think that shippers can actually push more volume through the freight economy, is that there simply isn't capacity. And shippers are basically at a point where they're doing everything they can to push freight out there, that really it's about as good as it's going to be right now. As you think about that increase you described, a 50% increase in tender requests means that there's been a lot of freight moved out electronically. And one thing I want to point out about the OTVI index, which makes it so powerful to see the freight economy in near real time. Remember, this data is reported within the past 24 hours, and it's electronic request. This isn't coming into our data set weeks after it's taken place. It's the first thing that shippers do is they maintain their relationships with their contracted carriers, and this is the message request between the shipper and the carrier that's under a fixed contract. And that's what makes it really powerful, because you're seeing the top of the funnel in the freight market, and it's painted within the past 24 hours. It's very different than any other index that's out there, because it shows you actual physical requests from a shipper to a carrier.
Craig, there's a lot of really good stuff there. Let's unpack that a little bit. So I think for starters, the speed of the data, right? I think that's really important there. Kyle, give us a little bit of a, tell us when we see these load tenders 24 hours after they happen, what are we seeing there?
And one of the best things about these tenders is just like what Craig was hitting on. It's not looking at invoices, something that's already occurred and that we're just looking at something in the past. What it's actually looking at, especially because we get a couple different data sets from the tender data set. You get when that tender sent out, when the actual pickup date is, the OD pair, the trailer type. And so what you actually get with that is kind of a leading indicator, because naturally tenders are about 24 to 36 hours ahead of time. So you're actually getting a leading indicator there of what's actually happening. So not only are these data sets here 24 hours ago, so there's I'd say about a 12-hour lag time, right, to those tenders coming into SONAR. So we're actually getting that and then seeing a forward look of what's occurring in the market right now.
Yeah, that's a good point. So it depends on the market, but yeah, sometimes, shippers will tender loads about 24 hours in advance, all the way up to, I think we've seen sometimes up to 4 or 5 days in advance sometimes. So when that happens, you're really seeing tender requests or load requests that are scheduled to pick up about 2 to 3 days later.
And you can see, you can actually see how far in advance tenders are coming through the tender lead time, tlt.usa. Will actually tell you how far in advance across all of those tenders they're being sent before they pick up. And I think that's a really good indicator to understand how far in advance these transactions happen. Now, one thing I want to point out about tenders versus other types of data sets that are out there is a tender is, again, a contracted relationship. And if you think about this from a shipper standpoint, the shippers that maintain contract relationships have big routing guides. Basically, they prioritize those routing guides on typically the carriers that are on those lanes, and they happen to be the larger carriers, the carriers that can provide consistent capacity on that lane. And they typically have first right of refusal on freight on that lane. And so what's nice about that is, if it's being tendered and accepted by the carrier, it doesn't show up in any other data set. It will not show up in a brokerage load board if it's been accepted by a carrier, and it doesn't show up in a traditional spot load board because it's already been picked off. So this is the first domino to fall. If we see high volumes on tender request and the OTVI index, we know that's the first thing to happen in the freight market in terms of firming or softening.
100%. I think that's spot on. And along with that, too, that we've seen, you talk about that first line, those large carriers are able to see these loads first, and they have that priority of whether they want to accept or reject. we've seen, since we've seen volume levels surge and hover around that record high tender rate, about 50% more requests than this time last year, we've seen rejection levels rise along with that, hovering right around that 25% mark. They've been sitting there pretty consistently since the very end of August. And that's affecting a lot of shippers' routing guides. And where I'm going with this is we've been talking, so load tenders are obviously very high, rejection levels are high, and a lot of folks that we talk to have seen increased volume levels this year, but not all. I was talking to some brokers, some decent-sized brokerages today that were actually seeing a big decrease in their volumes compared to this time last year. Craig, any insight there? Kind of like paint a picture as to maybe the different types of freight that might experience that.
Yeah, a couple things to unpack there. It depends on the type of freight that the broker handles. So a broker that handles things that are tied to energy, think about oil prices and what they've done and the lack of energy exploration. Brokers that are tied into trade shows and events are going to see, obviously, we know what's happening with concerts. So a lot of that very well could be the type of freight that they're moving. Parts of the industrial economy, particularly tied to energy, is also relatively soft to other parts compared to retail and such. So that's one thing I would want to understand. The second thing is, if a broker is reliant strictly on the spot market and they're getting basically freight that's been in the spot market, remember that what's happening is that the shippers are securing their contracted carriers first and giving them a lot of freight. They're putting that freight out there. And so we're not seeing as much freight absorbed by the traditional spot market as you would with what's happening with the contract market.
Good stuff. Now, Kyle, we've talked with a lot of folks, and I think one of the things that we've shown folks here on the SONAR platform is actually the map view with combining with tender rejections and volume. So you can actually see in which areas in the country shippers are having the tightest capacity and also have the greatest demand. And I think, and we've actually had some customers utilize that for very successful sales practices. Any thoughts there? Like, what are your favorite things to look at when we do that?
Yeah, and this isn't the first time that we have actually shown this correlation or these two data sets over one another on a map setting. And I always think back of when I was a broker. I mean, same thing with you. When we were working at brokerages, I never really got any help from my brokerage of like who I can call. Maybe you got like 1,000 names on a lead list.
I didn't.
But we were talking about this morning.
My lead list was Google, shippers.
Yeah, exactly. Look for warehouses. Start proximity searching.
Calling on
Yeah, and so
Amazon.
So this was a way that you can actually utilize this to see, okay, where should I live today? What areas should I call? And it's always those markets of, okay, well, I want to call where there's the most volume. But not only do I want the most volume, I want the most opportunity for freight. So I want to look at the dark areas, which are, what are we looking at? Volumes here?
Yes, we've got OTRI up here on the map. So yeah.
So we have rejections here. So not only do I want to go to the markets that have the most amount of freight, that gives me the most opportunity, but also areas that have the largest amount of tender rejection rates, because in those times it gives you a little bit easier of a conversation. You can really talk it up to, hey, I work with companies in your area. There's a lot of people who are having issues with their route guides. This data set really looks at the health of a route guide, so that it helps you understand that and pitch it a little bit better of your services. So that's how
right here's a perfect example. I'm hovering over for folks over on the other side of the screen. They should be able to see this. El Paso, tender rejections are about 49% right now. National average is about 25%, so about double.
Interesting thing about El Paso, I was actually just looking at it earlier today, is that if you look at it from the van perspective, van is actually up about 0.5% to 1% more, so it's at like 50.5%, but it's up about 59% week over week, which is just insane.
Remember what happens in El Paso is that's a lot of import activity.
Yep.
So you're getting a lot of freight. We've seen the ports hit record volumes. LA reported record freight volume through the port of LA. So what you're seeing in El Paso is a lot of that import activity that's taking place, a lot of auto exposure and electronic exposure as people are preparing for the big, what we're expecting is a big holiday. So a lot of that freight's coming in for imports is what you're seeing in El Paso.
Which makes sense because we've seen about a 40% increase in outbound volumes shipping out of El Paso over the last 7-8 days.
Well, I mean, I want my Ford Bronco pretty bad, so I better start seeing that as well. So automotive.
You in the market for one? You put in your pre-order yet?
I did put in a pre-order for the Bronco.
So you're a Ford Bronco guy, not a Tesla Cybertruck guy, huh?
Correct, yeah.
Okay. Dooner on what the truck is definitely hardcore Tesla Cybertruck.
Well, if you just look at our personalities, it just makes so much sense what we selected. So, I got Macho Man Randy Savage over there banging the gong of just like, or the cowbell of a sense. So yeah, it makes sense. He's got the Cybertruck coming.
Got it. Craig, do you have a dog in the fight, or are you just going to sit back and see what happens?
I like all of the new truck types. The Rivian looks pretty cool too, so I'll throw that one out. It's effectively a skateboard. They're building basically all of the powertrain is built into the chassis, and they can just put any type of box over it. I was a fan, or am a fan, of the Nikola Badger. I think that's a cool-looking truck. Cybertruck is too apocalyptic for me. I like the Bronco. I think that's a really cool vehicle, but I don't know about the Cybertruck. I appreciate the edgy design, but I don't know that I would end up buying one. It reminds me of, if you remember the Hummers that came out when they first came out, but that was right after the Gulf War, and we sort of had this, our military pride, and I think Norman Schwarzkopf was the spokesperson for the Hummer, so I don't know.
The Hummers didn't last. I believe they've stopped production a few.
Oil prices.
Probably couldn't even drive them in California right now.
I know. Good stuff. Well, Craig, we've talked a lot about imports. Let's actually dive in. So one of the markets that I was looking at a lot was obviously LA, right? LA is the largest port, and we'll lump Long Beach in there as well, although they operate a little differently. But for sake of example. Imports are up out of LA right now. They're actually sitting, if you see the blue line there for the viewers, right there, we're right around year-to-date high on imports, and they're holding very steady. In fact, ticking up a little bit further. And again, this is up to date as of 24 hours ago. And then that orange line on the chart, we're actually looking at truck outbound volume out of Ontario. So can we expect these imports to hold on these levels, and that will likely maintain the truckload volume throughout the rest of the year? Do you think that's realistic?
Yeah, I mean, realistically, so remember, you have Golden Week that's coming up related to the Chinese. They take off for a week, very similar to the Chinese New Year. So you'll see some lag happen sometime in December, really related to the holidays. But remember, what happens at the port is a lot of what you're seeing, the volumes that are coming in, are volumes that are related to the retail peak season, which some would argue we're already in. Typically, retail peak season is Black Friday through Christmas, but there's a lot of theory that because of the fact that 2020 is unlike any year in history, that retail peak season started as early October and could take us through the end of the year. And so in order for product to be purchased for Christmas, it has to be into the United States, into the domestic market, really by the second week of November. And so if we're seeing a lot of push of product into the ports, you're going to see a lot of that freight filter through the U.S. economy. So one of the interesting things, and I'm glad you mentioned the difference between LA proper and Ontario, California, is they are very codependent markets, or Ontario is very codependent or dependent upon what happens at the port of LA. But really what happens is that freight moves into the LA basin, into the ports, and then they move the freight from the ports into those massive warehouses in places like San Bernardino in Ontario, California, where they break the containers down and they then shift it for domestic consumption. So it comes into the ports in LA and Long Beach, and then it moves into that inland empire where it goes across the economy. So what I look for is when you start seeing LA, the ports, start to drop, it will still be a couple of weeks before you see Ontario drop. And so as long as LA is continuing to push import activity, then Ontario is still going to be very, very strong.
And I think you said it right there, and that's partly why SONAR is such a such a beautiful leading indicator for so many aspects of freight, right? When you think about there's a lot of tools out there that talk a little bit about, or show a little bit about what's happening in the trucking market, but none like Sonar that covers so many different modes of transportation. And truckload volumes, particularly for the van sector, I think it's approximately 70% of all truckload volume in the country on van is from ocean freight at some point. So when we think about it like that, I mean, we saw right here if you're looking at the charts right now, let's throw it up on the screen. You can see in the middle of February, imports into LA just absolutely bottomed out there, took an absolute nosedive, dropped approximately 65% there. And it wasn't until almost about a month later, we saw truckload volume out of Ontario bottom out as well. And that would have been about mid-April. So, and then again, imports picked up, and it took about another 3 or 4 weeks for truckload volume to pick up as well. And we've continued to see that trend here on the chart. You can see the blue line always ticks up first, and then a couple weeks later, the orange line, which is the truckload volume, follows there. So it's just a great indicator. If you ever want to know what's going on in the truckload market, especially anywhere around some of these port cities, go to the import data, and you'll see exactly what's going to happen in a few days to a few weeks, depending on how quickly it correlates.
Now, Luke, not only does Sonar provide the multimodal elements to freight, it's also the only platform that has electronic tenders. And if you think about when we talk about contracted freight, for the larger carriers, contracted freight can be anywhere from 70 to 90% of their business. Sonar is the only platform in existence that actually shows those electronic tender requests that we then break down into a lot of different scenarios. So OTVI we've talked about, which is tender volume. The OTRI, the outbound tender reject index, which shows you when you see high rejections, that means that trucking companies are choosing not to take the level of contracted commitments that they had committed to. They're turning down offers they have in the contract tender market. So it's very important to watch that. When you see high tenders, rejections, then it suggests that carriers have better things to do with their capacity. One more thing I also want to point out, and I think when you think about what 2020 has represented, in April, we came out, I wrote an op-ed piece in mid-April where I talked about a bullish sentiment. I became very bullish in mid-April and believed that the freight market was going to come back really strong, and even called it a V-shaped recovery. And for months, people thought we were nuts, that there was no way that 2020 was going to end in a V-shape. The reason we had really good intelligence is the fact that we were able to look at electronic tender data, the request from shippers to carriers, which has to firm up first before you see any level of activity in the spot market. And that was why when we saw that bottom, we saw that flat, we knew that basically the economy was going to come back on board, and once it did, it was going to come roaring. And we've seen it, and that's why we're ending 2020 with a bang-up banner year, because of basically the market is starting to really recover, and we're seeing that in the data.
Kyle, have you spoken to any smaller transportation companies or shippers that were surprised by the level of data that we have and didn't realize like what was happening in the market? Because I think a lot of folks, you talk to them and they're really only exposed to their own network, and they don't realize what happens outside of their network. Do you have anybody like that you've talked to that's just been surprised by this level of like granularity that we have?
Well, I think when you really segment it by that vertical, so looking at shippers versus brokers or any logistics provider, really where their model is, or, they make their money by, inefficiencies in that market. Brokers and carriers, they want that inefficiency so that they can capitalize on their margins. Now, from the shippers, the data that we've seen even more recently, I called it the month of the shipper earlier this month, because it's really a lot of shippers are coming on and just voicing, how much they weren't aware of this. And so that's really significant, is that those market movers around you, the route guides around you that are going to be affecting whether or not a carrier picks you or goes to someone else to be able for them to have an increased margin on their loads is extremely significant. And so really those indicators that Craig was talking about is really the viewpoint that a lot of the shippers are having, because at the end of the day, what we're looking at right now could be a potential 2018 effect where people are worried for their jobs.
Yeah.
Route guides are failing, budgets are blown, and so there could be a potential shuffle going into 2021. And so now we're just looking at what could be next. And I think that was kind of one of the questions I wanted to have for you, Craig. Is like, what could potentially disrupt something again? We talked about hurricanes going through hurricane season, but I was a little pessimistic around maybe a potential COVID reoccurring. I mean, do you think shippers are trying to shove any and all freight right now, just fearful that maybe things could shut down again?
No, I think everyone's sort of resigned to the fact that we're going to be living with COVID for some period of time, even if we have a vaccine or don't have a vaccine for a while, we're there. But consumers are spending money. Personal savings is way up. If you look at the amount of money across the economy that are in personal bank accounts, it's at record highs. And consumers are holding on to all that stimulus dollars that have come from the federal government. If you think about the fact that what the federal government did was over a course of about 2 months, they put as much, basically doubled the size of the amount of money that goes into the economy from the government just in those 2-month period. I mean, they basically doubled the federal budget. And that money is now flowing through the economy, and the great thing is that consumers are spending it. And they're spending it on things that drive freight. They're not going to concerts, they're not going out to sporting events, they're spending it on things that drive freight, and they're doing it in ways that we haven't seen. Consumer behavior is changing, and that will continue. The other thing is inventories are at a record low. I think this is the thing that we can all take solace is not only do we see import activity and freight demand hitting records that we've not seen, we're also seeing inventories very, very, very light. That means that those retailers and other companies that have experienced significant inventory shortages are going to start wanting to refill their stores and their warehouses of product, and that's going to be bullish for freight. I don't see any signs of anything that gives me pause. The one thing I did say a couple of weeks ago is if we had a contested election where basically there was a challenge of change of power, that would be a pretty big issue because it could cause issues like currency issues around the world. But that doesn't appear to be the case. It looks like the election's going to be a lot less doubt about where the election's going to end up. And because of that, I'm pretty bullish moving into next year. Regardless of who ends up winning the election, we're going to see a lot of stimulus. You know, if Donald Trump wins the election, the Republicans are going to pump a lot of money to really bring the economy back. Now, they're going to spend it in different ways. If the Democrats win the election, if Biden wins the election, big dollars of stimulus are going to come into our economy. That is good for the freight market. We've seen how impactful government stimulus is in terms of driving freight demand, and there's no reason to think that the government's going to stop doing that. It's not only our government, but we're a global economy, so as other countries also spend a lot of money, it's going to drive significant freight demand. So I'm very bullish about volumes. The other factor is capacity, and I have a lot of reasons to be bullish about the tightness in capacity because drivers are not coming back into the trucking industry, and they're not taking as many trucking jobs as they have in past years.
I think that's spot on. And one other thing too is, regardless of what happens, SONAR.
Wait for it. Wait for it. Wait for
We'll
the pause.
show you what happens as soon as it happens.
You have to know. I mean, this is all about real time. If you want to be the first to know, have access to the tender data and the data that's in SONAR. If you don't care about being the first to know, then you don't need it. But you want to know in a market where historical models don't work. 2020 has proven that historical data is of no use when you have these black swan events, and we have one, it seems like, every single week. It's insane. 2020 has been an insane year, and I think it demonstrates the need and desire for real-time market data in freight, just because of how fast things can change and how volatile the freight market is.
I think that's spot on, and I know we're getting here towards the end of time, so we're gonna have to wrap it up soon. But that brings us to a really good point. I mean, and as these historical models break down, you have to have real-time information, right? And I was talking with a couple of shippers recently, some fairly large shippers, and they're actually starting to rethink their routing guides as they go into bid season. They're moving away from annual bids and going more towards a quarterly bid or mini bid options. So we're starting to see that a little bit more. But anyways, folks, that's the end of our show. Thank you so much for tuning in. Craig, of course, thank you for joining. Thank you, Kyle, as well. And we hope you all have a fantastic rest of your Wednesday. We'll see you next week.